Most weak business analyses fail before the research even starts. Why? Because they confuse a symptom with the actual problem. A falling stock price is a symptom. Declining sales are a symptom. Losing customers is a symptom. Those things tell you something is wrong, but they do not tell you what to analyze. A strong problem statement does three things. It identifies what happened, explains why it may be happening, and defines what the analysis should focus on. In this video, I'll show you how to move from surface-level symptoms to a stronger business problem statement that could guide a real consulting engagement. By the end of this video, you should be able to do four things. First, separate business symptoms from real underlying problems. Second, write a problem statement that is specific, objective, and useful. Third, connect the problem to stakeholders and business risk. And fourth, use the problem statement to guide the scope of your analysis. Here is the key idea. A vague problem statement creates a vague project. A focused problem statement gives your analysis direction. A strong problem statement needs three parts. First, define the central problem. That means naming the core business issue, not listing every problem the company has. Second, identify who is affected. That might include customers, employees, shareholders, suppliers, or partners. Third, keep the tone objective. Do not blame people. Do not speculate. Do not exaggerate. Your problem statement should sound like a consultant briefing executives, not like someone venting about the company. The standard is simple. Focus on underlying causes, not surface-level symptoms. Symptoms are signals. They tell you where to look. They do not complete the diagnosis. For example, stock price declined, revenue fell, margins compressed, market share weakened, customer churn increased. All of those are important, but none of them are complete problem statements. A better approach is to ask diagnostic questions. What pattern shows up in the data? What internal process, capability, or strategy is not working? Who is affected, and why should executives act now? Think of symptoms as the warning light on the dashboard. The warning light matters, but it is not the repair plan. Use the root cause ladder to move from observation to diagnosis. Start with the visible decline, then look for a pattern in the data. Next, identify the business mechanism behind that pattern, then write the central problem. Here is an example. Market share is down. That is the visible decline. The pattern is that the company is losing younger buyers. The business mechanism may be that product positioning and sales channels no longer match buyer behavior. Now we can write a stronger problem statement. The company's customer acquisition strategy is misaligned with the market. That is much stronger than saying market share is down. Evidence supports the problem claim. It does not replace the diagnosis. Financial evidence might include revenue trends, margins, cash flow, or return metrics. Market evidence might include market share, competitor moves, category growth, or pricing pressure. Customer evidence might include churn, retention, traffic, or satisfaction. Operating evidence might include inventory, productivity, cycle time, or fulfillment. But here is the mistake to avoid. Do not dump every metric into the memo. Use evidence that is current, relevant, and directly tied to the problem you are claiming. Good evidence makes the diagnosis stronger. Random evidence makes the analysis harder to follow. A strong problem statement also explains who is affected. Do not just say, this affects stakeholders. Name the stakeholder and explain the impact. Customers may be affected through poor value, inconsistent service, or lower trust. Employees may be affected through workload, morale, or execution problems. Shareholders may be affected through lower returns or increased risk. Suppliers and partners may be affected through volume changes, reliability issues, or strategic misalignment. The point is not to list everyone. The point is to show why the problem matters to the business. Executives care when the issue has consequences. Use this formula as a starting point. Company X is experiencing a strategic issue because of an underlying cause, as evidenced by data, affecting stakeholders and creating business risk. Let's make that practical. The strategic issue is what is not working. The underlying cause is the likely reason. The evidence supports the claim. The impact explains why it matters. For example, Company X is experiencing declining customer retention because its service model has not kept pace with customer expectations, as evidenced by lower repeat purchases and rising complaints, creating long-term revenue risk. That sentence gives the analysis direction. It is not perfect, but it is testable. That is the goal. Weak problem statements usually make one of two mistakes. They either describe symptoms only or they blame people. Weak example: the company's stock price has declined and revenue has fallen. That may be true, but it does not explain the business problem. Another weak example: management made poor decisions and failed to respond to competitors. That sounds judgmental and unsupported. A stronger version would be: the company's legacy operating model has not adapted to changing customer buying behavior, contributing to weaker traffic, lower retention, and margin pressure. That works better because it identifies a business issue, connects to evidence, and avoids blame. Strong statements diagnose, weak statements describe or blame. Tone matters. Executives are more likely to trust analysis that is precise, neutral, and evidence-based. Avoid this: the sales team isn't effective. That sounds personal. Use this instead: current sales processes are not yielding results, as evidenced by a year-over-year decline in closed deals. Avoid this: leadership failed to understand the market. Use this instead: the strategy has not kept pace with shifts in customer preferences and competitor positioning. The difference is credibility. Professional writing focuses on systems, processes, strategies, and evidence, not personal attacks. A strong problem statement narrows the project. A weak one tries to solve everything. Too broad. The company needs to fix strategy, marketing, culture, operations, innovation, and financial performance. That is not a project. That is a wish list. A better version: the company's omni-channel fulfillment model is increasing costs while failing to improve customer retention. Now the project has direction. You can analyze fulfillment costs, retention data, customer behavior, and operational trade-offs. Before finalizing your problem statement, ask: is there one central issue? Can data support it? Is the stakeholder impact clear? Can recommendations flow from it? Can the team analyze it within the timeline? Here is a 5-step process to help you get started. First, list 3 decline indicators from the last 1 to 5 years. Second, look for a pattern across the data. Third, name the internal issue that may explain the pattern. Fourth, connect the issue to stakeholders. Fifth, draft one clear problem statement. The final test is simple. Does your statement explain the real business issue, or does it only describe the symptom? If it only describes the symptom, keep working. If it identifies a focused, evidence-based issue that executives would care about, you have a strong foundation for your analysis. That is the difference between a weak business memo and a serious consulting engagement.